Hyper with the Thursday video, and it's Thursday the 6th of April, so happy new tax year, as I say every year at this time. A hangover from my life as a tax consultant, which is seems ages ago now, I guess it was. Right, I'm doing a video today because there's quite a lot to discuss. What I try and do in these videos, I mean, I appreciate that I give various different interpretations of market action. The reason for that really is so you understand what I'm thinking, or try and understand what I'm thinking. I mean, I'm assuming that I do explain this clearly. That may not be the case, but you understand what I'm thinking, so you can therefore adjust your thinking of the market to what happens subsequently. If I just told you blandly, I think this, and then the market did something else, you wouldn't know what I would like to be thinking. But this way, hopefully, you do have a clearer idea of my thoughts. So please give me feedback on this. That would certainly be useful. We're looking here at the hourly chart of FTSE. We have the peak here, all-time peak, 1, 2, 3, 4, 5. This counts as corrective. It's quite a sharp double zigzag, ABC, B, A, B, C. That's fairly impulsive, but doesn't really count very well. We then bounced up there again. We now bounced down again. So I think it's putting a bit of a struggle, and this pattern here is not that clear. It looks corrective at the moment. I'm suggesting the next important move will be to the downside. I have an extreme stop below here at the moment to sell the market with I think a 44-point stop. But then I tend to review these things as they happen if I get the chance. Sometimes, of course, it's triggered when I'm not around. Quite well, I guess the key levels. I mean, clearly 7250 is a key level. And that would be a third wave coming in if that gets taken out and we see acceptance below that level. The other key levels are the high here above 7360 and 7390. There, I mean, we're bounced at the moment. See how that develops. But I say the extreme stop is below this level here. So still looking negative, but this action here is rather unclear at the moment. In terms of time, we had the peak around here to there, so about a week of action, a bit more. This rally lasted 2 or 3 days, which is about right. It fits in Fibonacci 38.2% plus, so that actually time-wise fitted well, price-wise fitted well, but we haven't actually seen the next leg down clearly begin at this point. Right, the Dow peaked earlier, so we have the Dow peaked earlier than FTSE. In fact, the FTSE peak came in there. So we're currently on the Dow. We have an A, B, clear 5 waves down, C to the low there. Another A, B, C with a significant peak there. Very rapid fall yesterday on the news. So the system there is that we've actually seen an AB with a C coming in to take us lower. So that's also negative. ABCs can actually begin quite significant moves. The 1929 collapse started with an ABC, so it can happen that way. So right now we do have a pretty clear count suggesting that we're going to see another leg down here. This leg down went from 21,150 down to 20,400, about 750 points. So a move down to about 20,000, 20,100. It seems to be the most likely outcome here. Let's go down leg, look at the actual pattern since its peak. Okay, well, a nice clear 1, 2, 3, 4, 5, A, B, C. In terms of time, that's actually fine again. I mean, the relationship of that time span to that time span for correction, pretty much spot on. In terms of price, though, very, very subnormal. Although, of course, wave 4 is here, so that's 1 point, but obviously a big fall and a very little bounce. I think it's quite likely we might probe a little bit higher there, but any break below 20560 would suggest we're going to see some kind of significant fall. So again, I got an extreme stop below 20560 on the Dow. Actually, I just placed the extreme stop at 20567. That's down there. It's down here, I should say. The strongest support level is on the longer term chart. Let me go back to that. So for the sake of clarity, I've got a tuning stop below there. There's obviously key support there and key support there. So acceleration phase could come in once that level there is taken out, although of course anything can happen in these markets. Right, here's the 30-minute chart of the DAX. Interesting situation here. Actually, we've got the low there. 1, 2. I guess it's possible that there's a 3 to there, or even to there, I suppose. That would be 1, 2, 3, 4, 5. Sort of truncated A, B, C there, which could be a fourth wave. I mean, just stretching this. I mean, that's quite a substantial second wave. Fourth wave looks a bit subnormal. Then you got a 1, 2, 3, 4, 5. So that peak could be important with a 1, A, B, C, 2, and the third wave coming in now, which could actually be over with a fourth wave developing at the moment. So possible peak there. I mean, I have been saying that I'd expect to see new all-time highs given how close we've got. That remains the case. There's definitely a factor here, but we've got the Dow looking pretty dodgy. We've got FTSE also looking like it's due a third wave down. So the DAX would like to follow, although they do trace their own course. So although at the moment this is an ABC, and my preferred counter really is that this is a fourth wave, but it's getting a bit too big to be a fourth wave. It's quite a large fourth wave. I guess as following price pulse theory, which is an excellent book if you want to read something interesting by Tony Plummer. The stronger wave will be gathering force now if I'm right, if we are near a major peak. So the corrections will become exaggerated, and we could easily see a fifth wave failure also, for the same reason. So a rally could well come in, but on FTSE and the Dow, it's looking now less likely to be of any substance. Right, gold, the 200-day moving average is around this level here. We saw a new high yesterday, but a very marginal affair. Two basic counts here, either the move first leg up and there, in which case this is a 2 wave, and we've got a 1, 2 with a third wave now due. That's obviously a very positive interpretation. The second interpretation is that in fact the first leg up, 1, 2, 3, 4, 5, ended yesterday. In which case we've now got a correction, A, B, C coming in to shake everybody out and set the scene for the rally I've been expecting. I think either count's valid. I don't see any particular strength to either one count. We just need to see a thrust above there to negate the corrective count, or I guess a fall below the 1240 level would confirm the other count. So right now it's a bit betwixt and between, with the moving average proving to be insurmountable as far as gold's concerned so far. Right, silver perhaps supports the second count. I'm calling for correction with a 1, 2, 3, 4, and then this fifth wave thing perhaps starting from there. So that would again give us a case for another leg down below 18 probably, before we see any kind of upside. Again, a decent thrust above here would obviously dispel that. The MA is around here, I think. I mean, it's certainly above it at the moment, but it seems to be unable to, using it as a floor, but it seems to be unable to actually make any further progress. So I'm sorry that's a bit ambiguous, or extremely ambiguous. I wish it weren't, clearly. I'm still heavily positioned in gold and silver vehicles, coins, ETFs, stocks, etc., and spread betting. Anyway, right, that's all for today. If that's interesting and useful, I think you'll see why I did a video rather than a written report today. Quite a lot going on, and I've really got to discuss these things on a chart, I think, to convey any real meaning on it. Thanks for listening, have a great day, and bye for now.